What is going on, guys? Stas here. Welcome back to another video. So we're going to break down Tesla in this video, the charts, my thoughts, kind of where I see it heading here in the short term. And we're going to break down this article, break down China a bit, talk about Tesla over there. So hit the like button, make sure to subscribe, and don't forget to follow me on X and on TikTok. Those are linked down below. And with that being said, guys, cheers. Let's dive right into the video. First, actually, let me make my face a bit smaller. There we go. And now let's get into it. So at this point, it's currently about 11:30 a.m. on the East Coast, and we have the S&P, the Russell, the Dow, and the NASDAQ, all the indexes, in other words, here in the U.S., they're in the green, and we have Tesla up a little bit, about 0.4%. Now it's at $178 per share after hitting over $180 per share yesterday morning. Tesla opened up at about 175, then we shot up to almost 183. I'm not sure if you guys caught that, but that was at about 10 a.m. on the East Coast. Then we sold off pretty much for the rest of the day. And notice how today, guys, we actually took out the low from yesterday, right? We took out all the levels from yesterday that we held. Again, we opened up at 175 and we got down to 172 today, right? So we took out that opening price from yesterday, and all day intraday yesterday pretty much we held around 176, 177, and obviously we're under that point as well, or we were earlier today, and now we're trying to rebound over the mid-high 170s again, but it looks like we're struggling as of now. So in the very, very, very short term on Tesla, guys, I'm watching the intraday at about 175 to 180, as again, not only has that been a sticking point today, but we also struggled there a lot yesterday, and you guys can see on this 10-day chart, if I pull it up over the past couple of days as well, we've been struggling at about 180. So it's not only today and yesterday, but it's been about 5-6 days that we've been struggling at that point. So if Tesla could start breaking out of 180, 185 into the 200s preferably, okay, that'd be great for the bulls. But as of now, we're still under these moving averages on the 30-minute chart, on the 20-day chart. You guys can see clearly we have a death cross, which is not good. And here on the 4-hour chart, we have a descending triangle, which I've pointed out before, but I'll mention it again since we're doing another update here on the stock. You guys can see we have lower highs being made into this support at about 174, 175 bucks, which we have been holding these past couple of days, which is good. We're holding by a thread, but we are holding, and we also held over, it looks like over a month ago, early February, we held mid 170s, then we rallied. So if we do rally, that'd be nice, but let's be honest here, guys. Looks like the bears do have an advantage in the short term, and a descending triangle is a bearish pattern. So if this plays out, Tesla could be selling off and going more towards the mid hundreds, which honestly is where I'm looking to maybe get back into Tesla. Potentially. Ideally, I'd like to get in between $100 to $125 per share. Who knows if that happens, though. Some bears out there think that will happen, but I don't know. But, who knows? Maybe I will start nibbling if it gets to 150. That's if this descending triangle here plays out. Time will tell. What do you guys think? Let me know your thoughts in the comments as always. And by the way, let me know in the comments where you're watching this video from. If you're in the U.S., what state are you watching this video from? And if you're outside of the U.S., what country, what city? Let me know in the comments. So let's break down Tesla's China registrations and how they're up versus 2023. But we can see delivery expectations for Q1 are coming down. So let's come into this article a bit, or dive into it here, guys. We can see Tesla vehicle insurance registrations in China last week increased sequentially, but fell around 20% compared with the same period in 2023 as analysts began revising Q1 delivery estimates for Tesla. And we can see here Tesla insurance registrations in China totaled 13,200 last week, up 5.6% from the prior week, but down 22% compared to a year ago. So that's actually a big drop there, almost 25%. Through the first 10 weeks of 2024, Tesla China insurance registrations totaled 90,400, up around 2.6% versus the same time frame in 2023. Not bad. Meanwhile, Wall Street consensus currently still has Q1 deliveries of 489,000 units. According to FactSet, Tesla is expected to report first quarter deliveries in early April, which, guys, that's coming pretty soon here. So, yeah, it looks like registrations for the first 10 weeks of 2024 totaled 90,000, up 2.6%, which that's good. It's not down like the other metric we saw, which is down 22%. It's up 2.6, which I guess is decent, but obviously not the growth that they once saw, or, the growth that they desire, right? So let's see. Deutsche Bank analysts on Monday wrote they expect Tesla to miss consensus estimates, quote unquote, by a wide margin. Oh man, Deutsche Bank is bearish right now, no doubt. And hopefully this happens. I mean, I'm not trying to piss off the Tesla shareholders right now, but I kind of want the stock to go down. I'm sorry. I'm just being honest because I want to get in selfishly, right? We'll see how it goes, though. We'll see. I'm just being patient, and it'll play out. But the firm, Deutsche Bank, lowered their delivery for Q1, their estimates to, 427,000 deliveries, down from 476,000 due to low Model 3 production in the U.S. and a slow Cybertruck ramp up and overall weaker EV demand, which we've covered before. We all know EV demand is weakening in the very short term. I think this is a short term weakness. We just saw such a big boom, guys. We were bound to see a little bit of a slowdown. That's what we're noticing right now. So, yeah, low Model 3 production in the U.S., a slow Cybertruck ramp up, and overall weaker EV demand. Deutsche Bank is bearish in the short term. Deutsche Bank also cut full-year deliveries estimate to 1.96 million units, below the consensus of 2.1 million. And we can see Gary Black, managing partner of the Future Fund, meanwhile posted on Twitter on Monday that Wall Street's consensus Q1 delivery view is too high. Black views Tesla will deliver 425,000 units in Q1, slightly above the 422,875 units that Tesla delivered in Q1 2023. So we'll see how that plays out, guys. And obviously, there's a lot of opinions across a lot of different firms, right, guys? I mean, people are cutting the price target, raising it, buying the stock, selling the stock. But either way, these next couple of weeks for Tesla are going to be very, very crucial in determining where the stock price is going to go, right? At this point, again, like we covered earlier in this video, we are seeing a descending triangle, and this could get ugly. It just could. That's the reality of the matter, and I want to put it here in this video that I will be buying Tesla in this next leg down, during this next leg down, if we even get it. It's not guaranteed, obviously. We don't know what's going to happen, but look, let me show you these levels, then we'll wrap up this video. We can see here again, descending triangle. If that plays out, we covered that. First gap to fill, major gap is down to 150, which is why I covered that. That was the low, looks like, from April of 2023. So that'd be the first window where I would consider nibbling a little bit more towards 150. And if it saw another drawdown from there, from 150 down to 100, that'd be a big window, a buying window, in my opinion. I'd be buying, especially towards $100 per share, which you guys may or may not remember. We were at that point about a year ago, a little over. We're talking 14, 15 months ago. Tesla stock was at $100 per share. Then we pretty much tripled to 300. We saw a nice big move to 300, and now we're on our way down again. So I'm looking to get, again, in the stock, between this 100 to 150 window. It is a wide range, but that's what I'm looking at as of right now. So what do you guys think about Tesla, China, competition, all of that? Let me know your thoughts in the comments. Hit the like button. Make sure to subscribe. We're trying to get the 50,000 subs this year, and you might as well get up to 15 stocks for Moomoo. If you haven't done so already, guys, just use that link down below or go to staserfest.com/Moomoo. Open up your account and fund it with at least $100. You get 5 stocks, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks, and each of those could be valued up to $2,000, guys. So get on it. Use that Moomoo link down below. And with that being said, cheers. I'll catch you all in the next video.